Welcome back to our YouTube channel, and today we will be discussing about price action as well, and we will be discussing about gold trading, that how you can make your best strategies to in the gold and to earn good money. And we are going to give you a perspective where you will be understanding the price action and how the price action moves, and how you can also identify your trading points and from where you can take the exit and entries. So first of all, what you have to do, you have to look for a trend. You have to identify a trend. That if the trend is already identified here, if you can see from here, it is very much understandable that it is upward trend. And then what you have to do, you have to look for any kind of chances where trend is showing weakness. So if it is showing weakness, then you have to be away from this situation. But if it is not showing any weakness and it is showing that it has a momentum, as it is showing in RSI, this whole area which I have highlighted, it is above 50 level. So it means that the momentum is there for trading. And if you want to come into buying side, so the momentum is already there. So that is the first thing. Second thing, you have to identify your previous highs. Whenever market is crossing your previous high, you have to wait until the market coming back and retesting the area. For example, from here 2780 is the level where the market has came back and tested that area, and from where that is the point where you have to take the entry. So why it is very important? Because first of all, if you come to your indicator, whenever you are reading your price action, you have to put some indicator, because it will give you a perspective, it will give you a little bit clarity, and also it will give you a average price, whatever you are falling, even if you are falling RSI, moving average, whatever. So it will give you a average area. So here it is telling you that the market is already at a discounted prices. Why? Because market is near to the average price. So 20 days average, 20 candles average price. So that is the area where we are interested to buy. So if you will buy from here, what will your target be? Your target, of course, is going to be your previous high or even crossing that level. So you will take the entry from here, you will put your stop loss around previous low, and then you will have your targets upward. So it depends on your targets, but what you have to do, you can also put your Fibonacci levels, which will start from here till here, and then according to the expansion, you will take out the target that will be around here. So this is the level where your target will be, first target. So, and then you put your second target, where you will have your swing high, the recent swing high. So ये आपके पास this is what your swing high is, the last swing high. And when the market is coming down to that point as well again, and that point is around 2813. So whenever the market is coming to that point, you are a buyer. And why you are a buyer? Again, the market price, if you check the market price, it is still above, it is still showing a lot of momentum in this second circle, and also at the same time it is near moving average. So we have a discounted price, and as well as we are buying near to the previous high. So that is giving us a huge support, and price action is also telling you. As well as if you see all this area, this is not looking as a impulsive move, it is actually a corrective move. So when you are having a corrective move, you have a support level, you have clearly a visible area where the market is near to the average price. So of course it's your entry, and when you are taking your entry, you set up your profit targets, and then there you go. That is your profit targets, and you book it, and then you leave the market. And why I am not here, I'm not recommending you to buy here. Why? Because we don't have any kind of price action movement which is telling us to come to buy from this level. So you have to wait until the market crosses again, and it will give us this level of support. So, and whenever you have this support level, because also we were not interested in buying here, because we are not around the discounted prices, and then it gives us a double top, and then market when crosses it, definitely now we have a new high. So whenever the market comes back around that area, so that area is 2877. So from that area we are again interested in buying, and we are ready to take another ride. And if you think, if you know about this area, if we are talking about this area, so you know that there we are above 50 level RSI status, okay. And if we are above that level, it means we have the potential to in a buying side. And then you have a double top here, which is also, of course, it is a support level where the market will stop and you can have an entry. And whenever the market is going back, then you are, there you go, you are near to your targets, and you take the exit after that, of course, near to the previous high. So why I am actually saying that, most of the time what you have, this is a tip for you, most of the time when you are doing, trading in a gold, so don't, most of the time, be very careful whenever there is a double top. For example, here we had a double top, it has a spike. Here you can see our market has fallen very sharply and then recovered. That is, what is this? This is calling a sweep of liquidity. So wherever it is, there would be liquidity, it will sweep that, it will grab the liquidity, and it will continue into the original direction. So here, why are we not here? Like, again, it is near to a support level, but why are we not here in favor of buying? Because now we can see that first time after a very long time, it is the momentum is down, and you can see RSI is telling us the momentum is very down, and also we don't have a new high. The market hasn't formed a new high. So if it's not forming a new high, the previous high is still intact, and we have a double top now, and the market is not even giving us a small correction. Actually, it has given us a sharp decline in the prices, and then you can see this is the corrective wave, looks like a corrective wave. So it means that this is a point where we should stop buying until we get another high here. So if it will give us another high around here, this level, so then we can, just a second. So if it will give us another high, so then we will be in a buying situation again, because then the momentum would be there. The market structure would be telling us that, okay, the market structure is intact, and now you can come into the buying situation. But if the market is coming down to this level, if we talk about this level, so if the market will cross this level, so as soon as it is crossing this area, so we are in a sell side now, no longer we are in a buy side. So we will start selling, we will start short selling the market, and that is how you are going to make money. If you know that how to analyze the price action and how to analyze the market prices, definitely you are going to make a lot of money, and that is the way to go. But if you don't know, then definitely you have to understand, you have to learn it, and first if you learn it, then definitely it is going to help you in a longer time of period. So that is why I am here to tell you, we are here to teach you everything. Until you don't know, you can join our groups as well, where we will providing you the analysis, we will help you to understand the charts, reading and everything. And thank you very much for being with us. I hope that you people like this video, and we will come up with a new video with a new trading strategy, and we will try to teach you everything about the markets and price action. Thank you. Have a good day. Take care of yourself.